Well, thanks so much for tuning into this conversation. Railway stocks are the toast of town. Almost every company is getting in orders, and the markets are recognizing that. Jupiter Wagons is no different out there. The stock is up about 5 or 6% in today. The last 5 months, the last 1 month, the last 5 days, the last 1 month YTD, the performance has been very strong. Now, we joined by the MD, Mr. Vivek Lohia, to talk about how is it that he's feeling about the business, especially in light of the fact that they've done a QIP, they've raised the money, they've acquired Stone India, they are getting orders, the book-to-bill ratio is northwards of 3 times, and there could be more in store. Vivek, good having you. Thanks so much for joining in. It seems to be a purple patch of sorts for companies in the railway infrastructure business. Tell us a bit about what is different currently for you relative to what it would have been in the preceding few years.
Thank you, Neeraj, for giving me this opportunity. So I just want to start with this the railway. What you are seeing, the growth in the railway infrastructure, I think it was long overdue, and it is in line with our Prime Minister's vision, where he overall he wants to bring down the infrastructure, the freight costs in India from 13% to about 5%, which is very crucial for the economic growth to continue and for us to reach the kind of economic heights which we are all aspiring to. And I believe that this is just the beginning, and this growth journey is going to continue and sustain itself. So already we have a very strong order book, as you pointed out, and we have a clear visibility for the next 2 years. On top of that, we expect railways to do a further procurement this year of close to 50 odd thousand wagons, out of which 10,000 wagons would be, it will be through a global tender, and there will be a new design wagon which they want to acquire, which will have much higher speed, higher payload, lot of self-diagnostic kits built into it, and it will be a much more safer in terms of safety. Also, it will be a much more safer wagon, and plus the maintenance of this wagon also will be the responsibility of the OEM who supplies the wagon. So this is going to be kind of a game changer, and which will set the trend for future procurements by railways.
Okay, by which you're trying to say that it won't just be an order which is sold by a company like yours if you get it, but you'll also operate and maintain it for a period of time.
Yes, absolutely right. So it is in line with what the railway's new philosophy is, what you are seeing in Vande Bharat and in other areas. So, and that is how, if you look at the global market for freight cars in the mature countries, be it North
Sure.
America or in Europe, that is how the freight wagons are being operated and maintained.
Got
So I
it.
think it's a move in the right direction, and it then as a company, it's not only a pure manufacturing play
Yeah,
for
yeah.
us, but then it becomes a long-term maintenance and operational. We get into that business also.
Sure. So just correct me if I'm wrong, and please help me understand this better. If I understand your current order book of 6,000 crores, if I'm not wrong, from there,
Yes.
the bifurcation that I have is that 5,000 crores is for the wagons piece, and the balance is for CV and container. Now, I also saw that there is this uh, brake discs part that you are um, now trying to get big into. You're also getting into EVs, if I'm not wrong. So help us explain what are the different facets of Jupiter Wagons currently, and how do this move over the course of the next 2 years?
Okay. So, so the core business is a wagon business. As you rightly said, it is a 5,000 crore business for us, and the balance 1,000 crores is made up by CV business plus the container business. Now, one big area where Jupiter is now venturing is in the brake system business, and so currently the brake system business, and if you look at the overall railway piece, is about a 3,000 crore business in India, which is mainly dominated by two players. So now Jupiter has done very strategic tie-ups with companies like Daco, which is a Czech-based company. Then with Covis, again a company based out of Europe, where we are now manufacturing brake systems as well as brake discs for LHB coaches. We are now in the process of developing the brake systems for Vande Bharat, and now through the acquisition of Stone India, we get the brake technology for the freight cars, which we are currently manufacturing. So that gives us substantial backward integration. Plus, we get the technology for the locomotive brake systems as well as for pantographs. So that piece, so going forward for us in the next 3 to 5 years, we expect the brake business for us to be close to about 1,000 crore business, out of which a substantial portion will be also the export market. So from India, exporting back to the European market.
No, sorry. So if I'm not wrong, initial revenues in FY 23-24 and annual revenues of 250 crores within 2 years, and you're saying this 200 to 250 crores, you will scale it up to 1,000 crores within the next 3 years.
3 to 5 years.
Yeah. So
Is the horizon.
Yeah, what I mean is, so after 2 years, another 3 years. So between up to 5 year period, you will take it from 250 at the end of year 2 to about 1,000 crores by the end of year 5 at the latest. It could happen earlier as well.
Yes, that is and the acquisition of Stone India and the other joint ventures are part of the whole ecosystem which we are trying to build around the brake system market. So it gives us substantial backward integration as well as forward integration. And if you look at the brake business, typically the margins are much better than what you get in the freight business. So it helps us also in our bottom line going forward.
Got it. A couple of other things. There was this recent, I don't know the exact term for it, but one of the railway players gave up a piece of its order because they thought they may not be able to execute, and the belief was that it gets distributed amongst the other players. Now, is that the norm, and therefore, are you in line for getting a part of one order like that? And are there some more large Vande Bharat led orders that could come into the market potentially, which you will bid for as well?
So, what currently, as I said at the beginning of the show, our focus is on the new tenders which railway is going to come out with.
Okay.
So that itself we feel is a very substantial piece. So that is where we are focusing on.
How large could that be? How large could that be? I'm just trying to understand.
So as I told you,
10,000 crores.
what we could, yes, close to about close to about 50,000 wagons is what we are understanding, which railway is going to procure this year.
Okay.
So it's going to be similar in terms of the previous orders which they had come out with. And on top of that, on the private side of the business also, we are seeing that the same robustness in the demand which was there earlier. So whatever orders which we are executing quarter on quarter, we are seeing similar order books again coming in.
Okay.
So we are seeing the robustness on the railway side also with the new tenders which are going to come in, as well as on the private side.
And
with regard,
sorry,
with regard to your second question on Vande Bharat, right now our focus is more on the brake systems with regard to Vande Bharat and other critical auxiliary pieces which go into that. On complete manufacturing of coaches, right now we are not focusing on that because we feel that already it's a very crowded field. There are a lot of players already who are vying for that business. So currently we are not focusing on that business.
Got it. Are your capacities good enough for executing larger or higher orders over the course of FY 24 and 25, or are you also going to do some capex to enhance capacity?
So we are already building in anticipation of this orders. We are also right now we have capacities to deliver about close to 7,000 wagons annually,
Mhm.
and we are already investing substantially in capex, and we are growing the capex. So the way we see it is by FY 24 onwards, we should be in a position to supply close to about 1,000 wagons every month to the Indian Railways.
Okay. By FY 25, you said.
So FY 25.
FY.
What we are looking at 25 to close to about 1,000 wagons every year to every month to Indian Railways. From currently we are doing about 600 wagons every month. So we are ramping up the capacity in the next 12 to 18 months to make it to bring it up to 1,000 wagons.
Okay, and assuming that there is, I'm guessing that there is a demand for that based on the current order book that you have. What does that mean for revenue growth? Because a lot of people, Vivek, that we speak to talk about non-linearity of railway uh, company revenues. Because the last 10 years there have been a lot of false starts, haven't quite gone ahead. This time around, people say it's different, but you got to be patient because there will be non-linear growth in revenue. It might move at a particular pace currently, and then it will really go up. So can you help us understand, say 2 years, FY 24 and 25, how different would be Jupiter Wagons looking from the current FY 23 numbers, which are also impressive, by the way. 75% growth is no mean feat, but you were at 2,000 crores, circa 2,000 crores FY 23. How different could 24 and 25 look like?
Uh, so, you know, at the very beginning, I said that now there is a substantial, which is very what is different from the past to the current is that there is a substantial focus of the government towards building the railway infrastructure, and they understand that it is a very critical piece to the overall economic story of the country, which was not the thought process earlier.
Sure.
So I think that has been a substantial change which has happened. And if you look at the freight on railway, say compared to road, there is a clear 30 to 35% price advantage which railway provides. So which is something which cannot be ignored. So I don't see that this journey is going to now de-accelerate. I see further acceleration happening, and which is going to be proven out with the new railway tenders, which, as I mentioned, which are going to come out for close to about 50,000 wagons.
Sure.
So that itself will be the proof of the pudding.
Yeah, but based on the capacities that you have and the execution timeline that you have, because you have got, the current orders itself give you visibility, as you said, for 2 years. So I'm just trying to understand how different do the numbers look from what they are right now. Are you in a position to be able to guide towards that?
So again, would be very difficult for me to give guidance on future numbers. But what I've told you in the show is that currently we have about a 6,000 crore order book, which we are looking to execute over the next 2 years. And top of that, we have also the brake business is going to start contributing to the bottom line of the company. And definitely with the new orders coming in and our capacities getting enhanced with the capex plan which we have in mind, so future numbers are definitely going to be much stronger than what they are currently.
My final question, because you apparently, and I would love for you to tell us that your wagons are slightly more specialized from what I gather from our analyst, and therefore the operational metrics may change. Now, your margins did really well in FY 23 over FY 22. You reckon there is significant room for improvement here, or will it be a slow, gradual process, or would you maintain margins at the current 12 and a half odd levels?
So I wouldn't say that there'll be significant improvement in margins, but what definitely, given that the kind of backward integration which we are aiming for,
Mm-hmm.
and the again with the brake business kicking in, and there's a lot of robustness in the future wagon growth potential. So we definitely anticipate that these margins are something which can be sustained, and over a period you will find some improvement in the margins. But given the nature of the business, you would not find any significant jumps in the margins.
No more fundraise, right? I mean, you wouldn't now need to. You've done a QIP, you've raised the money. Would you need any more equity fundraising in the next 6 to 12 months?
No, as of now, there are no plans to do any further fundraise because we have a very robust cash flow, and as you know, we are practically a debt-free company. So I think we are pretty much in terms of our fund requirements, we are pretty much secured.
Great. Okay. Well, Vivek, all the best for the quarters ahead. Thank you for taking the time out and speaking to us and giving us some lowdown about what Jupiter Wagons is doing. Lovely talking to you today.
Same here, Neeraj. Thank you.
Thank you.
You.
And viewers, thanks for tuning in to this conversation.